What's going on, everybody? In this video, I wanted to look over Senseonics stock, or SENS. We have some recent news to go over, and I also wanted to look at the chart. So let's kick this video off and look at some recent news. And I will leave the link to this down below for you in the description. But we have recent news that Senseonics announced coverage of their Sense E3 through United Healthcare. And this coverage policy expands access to the over 45 million lives covered by the largest healthcare insurance company in the US. And United Healthcare will begin providing coverage for the Sense CGM effective July 1st of 2023. And as said by Sense's CEO, the policy update from United Healthcare marks an important milestone for increased access to long-term CGM for people with diabetes. With the addition of United Healthcare, we're nearing all insured adults in the US having access to Sense E3 CGM. And if you didn't know, this is a 6-month system that effectively manages diabetes with sustained accuracy and a removable smart transmitter that provides vibratory alerts and comprehensive data regarding glucose values and trends. And this recent coverage decision adds to the extensive number of payers or insurance providers who include Sense in their CGM coverage policies that now benefit approximately 300 million covered lives, as well as paying for the healthcare provider's time for the in-office sensor insertion. So essentially, insurance can cover both the product and the medical procedure to insert the product. And this allows Ascensia, which is basically their global commercial partner, to introduce the CGM to more people living with diabetes. Now let me know what you think about this. I think this is actually fantastic news, and it further proves that Senseonics offers an innovative product, and more insurance providers offering coverage means more users that will use this product, as well as more revenue that Senseonics will take in as a company. Now let's take a look at the chart. I have a couple things to show you there. And first off, going back into March, we were trying desperately to hold this level here, this roughly 95-cent level. We did break this level right around earnings, continued to sell off, and we actually formed a W, or double bottom, right around 55 cents. We've recently been seeing a little bit more volume than what we're used to, the type of volume we saw back in 2022. And you'll notice something else. After this W, or double bottom, we broke above the 50 MA. We wrote it down a bit, but we didn't get a candle that closed under the 50 MA. Instead, we kind of bounced back over it. Now we do have a pattern that concerns me a bit, and this does seem like a double top. So what I'm watching for with Senseonics is a break over 83 cents. Now if you're a long-term investor, I'm sure you're taking advantage of these sales, but if you're solely looking at this from a chart standpoint, it's definitely bearish. We haven't seen a golden cross yet on this company. We're facing a descending 200 MA, as well as a descending 50 MA. However, with us now above the 50 MA, if we can continue some upwards momentum, hopefully breaking out of 82 cents, we can start seeing some upward movement on the 50 MA, and hopefully down the road a breakout of the 200 MA that actually holds, unlike what we saw back in August of 2022, where we just temporarily broke above the 200 but just couldn't hold it and continued back down. And we got very close to a golden cross, but it just couldn't cut it, and we continued to drop. I do think a lot of this chart price and price action has to do with just the recent macro environment we're looking at. We're looking at very high interest rates, and for a company that's burning cash, Wall Street sees a lot of risk with dilution. But one thing I did want to add is they do have a decent cash balance with about 40 million in debt and over 100 million in cash. And by the time they will have to be pulling out debt, I do expect interest rates to be considerably lower than they are currently. And I do believe towards the end of the year, we will start seeing some positive momentum on these small caps as Wall Street and retail starts anticipating rates going lower, which will help these riskier small caps that aren't profitable. And before I go, I did want to mention that upcoming earnings, we are expecting quarter-over-quarter revenue growth, which is good, but we are expecting also to eke out a slightly negative EPS. And I do want to show you that revenue's been kind of all over the place, but the general theme we've been seeing is year-over-year revenue pretty consistently. However, just a few quarters ago, they were right around $5 million, whereas what they're expecting in this upcoming quarter, like I said, is about 4.5 million. So not a record-breaking quarter, but I do suspect we'll see record-breaking quarters again in time. But thanks so much for watching, guys. Let me know what you think about this recent news, and how are you feeling about Senseonics in general. Thanks for watching, and I'll see you tomorrow.